What's up, guys? Jonathan Rose, owner, Masters in Trading. And finally, we're releasing the Thinkorswim Futures Spread tool. I'm going to explain exactly what it is this Thursday. This is by far the most advanced indicator that I've seen used on Thinkorswim. The ultimate goal is to make this web-based so it's available on any platform. But come this Thursday, we're having a webinar. There's a registration link in the description of the video. So let me explain exactly how it works. Probably hear from my voice. I am so excited about this thing. I've traded for 22 years. Throughout my entire career, I've always traded using pairs, using relative value, however you want to call it. I want relationships. I want to look at correlations. Nothing's cheap on its own. Nothing's expensive on its own. Everything needs to be looked at relative to something else. So let me explain what you're looking at here. There are 4 different lines. There's purple, green, white, and we'll call this peach. The purple line, RBOB, RB minus CL. So if you want to get long the spread, if you want to bet for it to go higher, you would buy the front, you buy RBOB, which is gasoline, and sell oil. We're trading the relationship between the two. If you put this trade on, if you bought this trade at the beginning of the year and held it until now, you'd be up $3,000. Friday alone made a big move. It was up $2,000. The rank tells us what percentage of the move is it at. So this chart I have on 90 days. So in the last 90 days, this is 85% close to its high. So the high would be 100 and the low would be 0%. This just tells you, relatively speaking, where is the move. I look at things relative to one another, and let me show you why. Before I do, also, we do this so it's super simple to manage your risk. So you know exactly, all right, I'm in this trade. If it's up this much, I'm up $3,000. I kind of give a rhythm for what my risk is. Let me show you what I would do with this chart. Okay, hopefully this is clear. So the purple. Notice we start at the beginning of the year and the purple rallies a little bit. All these others get crushed but come right back. The purple, it rallies, it comes off. It doesn't seem nearly as volatile. But right around here, that's when it really disconnected, right? Here it really disconnected. Here it really disconnected. So what can we do? As someone who trades full time, I got to be really careful when I deploy my capital in any given trade. So watch the analysis. The red line, or excuse me, the purple line. The purple line is going to be RBOB against CL. Purple, RBOB against CL. So RBOB, let's say we bought one and sold one, okay? RBOB, CL. That's what we'd be looking to do when it separates. Long one, short one, RBOB, CL. I think you got it. At the same time, look how expensive these got. So let's take the green. The green, natural gas against RBOB. Green, green, natural gas, let's sell one. And then RBOB, let's buy one. Okay, so that gives us the green, that gives us the purple. Now let's do the white. The white's going to be natural gas against oil. So natural gas, again, will sell one, and then oil will buy one. And then finally, we have the peach. The peach is going to be natural gas against Brent. Natural gas, 1. Brent, we get long. And that's pretty much how we look at this. But what we want to do next is the total. We want to get this to the lowest common denominator, because why do we need to do all these different trades? We don't. So if we take this to the lowest common denominator, we see short 3. These cancel each other out, right? So 0, long 1, and then long 2. So rather than doing this entire trade, we could break it down by just doing these relationships. What we also can probably do is, instead of doing 3 by 1 by 2, really you can just do 1 to 1. And that would kind of, in my opinion, make it the most simplistic way of expressing these breakdowns. If you just do it 1 to 1, you're just putting yourself in the green, right? Look at the green. The green is that 1 to 1 relationship. And then the green, if we would follow, when it breaks apart, the green just comes in like gangbusters. The green comes in like gangbusters. The other ones do as well. And this kind of meets each other for the trade really to work. You know, the same thing here. If we go back and do a similar analysis, and I'll do this one a little quicker because I want to show you some other things, but I also sign up come Thursday. I'll walk you through exactly how the tool works. This is just one pocket where it's going to work, but it's going to work throughout the entire energy. It'll work throughout the entire energy sector. So the same thing, purple will have selling 1 RB and buying 1 CL. Buy, and this would be sell, so I'll make that red. And then do you really need to do each one of these? They're all kind of the same. They're all right directly correlated at this point. So what you could do, and what I would do, is you'd want to do something that cancels one of them out. So like the green, for instance. For the green would buy natural gas, and then it would sell RBOB. The white would buy natural gas and sell oil. Again, having those cancel out. And the peach is going to buy natural gas and sell 1 Brent. Now, the thing to remember on this one is the disconnect is really here, because these are all going together. This one is obviously not like the others. So is this one right or is this one right? You'd want to do some kind of spread to make sure that you capture the relationship of the two. So I would just do white, green, or peach. White, green, or peach. They're all long natty gas, right? So we know that natural gas is obviously very, very inexpensive. I would do the white, because watch what happens. If I don't do these, and then I just focus on canceling these, then my total will be 1 to 1, green buying, red selling. That would be the net trade. And then you look at natural gas against RBOB. Natural gas against RBOB is going to be the green line. It's awesome. This tool simplifies everything that I do when I'm looking to do these different kinds of trades. The cycle is a full year. The year is going back to the beginning of 2020. I can scroll down, we could put moving averages on this, and then the different spreads that we could use are going to be all the natural gas spreads, all the heating oil, the different RBOB spreads. We can get more advanced and do different heating oil crack spreads, the mini crack spread, natural gas crack spreads. So quite a bit to learn in this, but what I wanted to show you is it's a super, super, super simple way to value different contracts to make sure that when you're getting long, you're doing it with what's inexpensive. When you're getting short, you're doing it with what's expensive. Finally, I'll leave you. This is all about the spreads. This tool also gives us outrights. What does the outright tool do? It's very, very similar. All I'm doing here is comparing CL against Brent. So Brent's actually going to be the yellow. CL is green. I changed it to purple because the green was hurting my eyes. But the same thing. Value them against one another. If you're going to get long what's inexpensive. If you're going to get short what's expensive. This Thursday, we'll be doing a live presentation. I'm going to walk you through exactly how to use this incredible tool. I look forward to seeing you there. In the description below, access the link and join us. My name is Jonathan Rose, and I'm the owner of Masters in Trading.